Hello everyone, welcome to IGCSE Accounting. In this video, we are talking about inventory and the trial balance, the relationship of these two particular accounting terms and also working. All right, let's have a look of the things. The inventory and the trial balance, just to let you know that in terms of inventory itself, there is no single account exists as an inventory, okay? And what is this means? It actually being recorded in the various accounts. For example, purchase, sales, returns, like sales return, purchase returns, journal, etc. Okay, but inventory, the balance will appear in most of the trial balance. Let me remind you one more time. Trial balance is something that after your ledger account closing, you have to post into trial balance. That means it's like a conclusion summary of your bookkeeping. Okay. And in this slide, we say that there is no account about inventory and it being recorded in various so many different account. So what is this means? Let's have a look. Oh, okay, the slide itself, sorry. Okay, for example, a stationery shop. All right, this stationery shop, the owner purchased 100 pens at $2. All right, so when this happen in our normal bookkeeping process, what we will do, we will debit purchase. Okay, we will debit purchase with how much, which is 100 times 2, which is the value of $200 as a cost price in debit purchase account. And if let's say this transaction is happened in credit term, that means not paying straight away, what we will do is we will credit the account payable because I'm going to pay 200 to somebody, which is the supplier, but not yet, which is credit trade payable, which is not yet. All right, you see, these two things, none of them is inventory, right? All right, let's have a look of next. Okay, I have 100 pen in my hand right now. And then what will happen in this month, let's say, okay, I sold 70 pen, which is $5. In the value itself is 70 times $5, which is total of 350 at the selling price. What we will do is, in the double entry account, what we will do is sales, we will credit, which is 350. If let's say this particular transaction happen, let's say by cash, let's say it's by cash, then we will increase cash, right? So it's debit cash 350, let's say in this case. All right, now we all see that all these accounts that I mentioned just now, none of them is inventory. Then how should I record and transfer the value into trial balance? Let's have a look. Okay, what happened here is a business will do a stock take. The definition of stock take is a physical count and valuation of inventory held by a business. Okay, now we come back to the example just now, all right? So what happened to stock take means that at the business year end, let me emphasize one more time, it's business year end, not year end, which is December. No, it's business year end. It depends on the business cycle, all right? And then the business will perform one action, stock take. And during this particular example, for this stock take, it counts how many pens this business still have, which is 30. All right, so we have a 30. Then how we do the record? What will happen here is we will take the remaining stock, which is 30 times the cost price, which is $2. So in the closing of the inventory of this business year end is 30 times $2, which is total of $6. How do we do this recording at the business year end? So this is how it looks like. So in the inventory, will be account will be like this, which is in the debit, and we will post this particular amount, which is 60, into the income statement, which is our financial statement. All right, so this is how it records into the income statement. and what kind of value, how it happened, how the inventory values come out. Okay, now just a summary to it, the relationship between inventory and also the trial balance. So inventory, when it held at the start of accounting period, which is we call opening inventory. And what will happen in the trial balance? It will appear in the debit side. Inventory is our asset, so it appear in the debit side in the trial balance. All right. At the other end, when inventory held at the end of the accounting period, which is we call closing inventory, it appear as a note only to the trial balance, usually underneath. Okay. All right. Let's have a look of one example. So this example is in page 74 if you have the textbook. All right. How this exercise works is, it says that the cash book shows an overdrawn balance. When this statement says like this, it means that the cash book is overdrawn, which is we use more than what we're supposed to. So it's a negative balance of a cash book. Remember? So it means that I've spent more than what I'm supposed to be, which is the business should be, and the bank allowed it. All right, it's an overdraft. Okay. Then the second statement of this question is the following trial balance have been prepared, but there is errors happened. So we need to prepare a corrected trial balance for this business called Mariam as at the 31st of December. So coincident, year end is business year end, which is the 31st of December of 2018. All right, now let's have a look how we correct this error and wrongly prepared trial balance. Okay, let's have a look. All right, so number one, I remind everyone one more time, for trial balance, we need to put the title of the business name up there. And then we say trial balance as at 31st of December 2018. Okay, spelling everything, the date is there, everything is correct. Then debit and credit and the currency symbol. All right, so let's have a look at the first transaction, which is revenue. So revenue always in the credit side. So this is correct. And then for purchase always in the debit side. So it concludes that the business whole accounting period, the total purchase is 66,750, which is correct, no problem. But now, just now in the statement, remember, it says that there is an overdraft. But in this this trial balance that someone prepared earlier, it says that it's a debit. So this is not right. We have to make it right. So we have to move this value to an overdraft, which is in the credit side. Because what it means, in the normal circumstances, in bank, it normally is an asset and it will always appear in the debit side. But for this case, the question says that it's an overdraft. So we already overspent what we have. Okay, so it's overdraft. We have to put in the credit side, which is the other way around. All right, please take note. And then what is premise? Premise is our asset, like our office is a building. So that's why it's definitely a debit side, which is because it's an asset. Now come to the other one, which is wages and salaries. Wages and salaries is expenses. So when expenses happen in the trial balance, it should be in the debit side. So we need to move this amount, 21,000 of 300 into the debit side. All right, now let's have a look of the next thing, which is trade receivable. What is trade receivable? Means that, okay, we are performing a sales. We're supposed to receive the amount credit sales, which is 12,313. That means we will receive the money, but we not yet. And this consider a asset. So when asset happen, suppose this amount should be in the debit side. And trade payable means that we are having a credit purchase, which is from our supplier that agree to let us have the credit. That means I haven't paid yet. So it actually is a liability. And it post in the credit side, which is correct because it's a liability. All right, I hope this is clear. Owner equity, I mentioned many times for equity in always in the credit side. So it's 88,000. All right. Then the next thing, there is a drawings. What is drawings? Drawing is the owner go and withdraw the equity from the business. So it's the other side, which is 15,600, which is correct. So you can see that owner equity and drawing is relevant to the owner, the boss. The boss, or you from here, you know that the boss originally is 88,000, and there is a draw. That means withdraw 15,600. So it's minus. All right. So the relationship between these two is like that. All right. Then comes to the topic of inventory, which is in the 1st of January. The opening is 84,552, which is correct. All right. And the next is rent. Rent is an expenses. It means a business, they are paying the maybe this office rent. So this I'm paying this rent as the expenses. Expenses will be in the debit side. So this is correct as well. Then next, sales return. All right, sales return means that we make the sales happening earlier. All right, and then what happened is maybe the customer want to return the stock of unsatisfied or whatsoever. Okay, so sales is always in the credit side when sales happen, and when it's returned, for sure it's a debit side because it's minus. Sales supposed to, I repeat one more time, sales every time it happens is in the credit side, which is opposite of purchase, all right? And then when it's returned, it will be the other side. So sales itself is credit side, but when sales returns, it actually should be in the debit side, all right? So this is something that I have to take note. And same goes to purchase return. Purchase every time should be in the debit side. However, now, in this case, it says that the purchase return in the debit side, which is wrong. So we have to move the purchase return to 488 to credit side. So it's this relationship, which is originally 66,750, but there is some purchase return, which is a return to the supplier at 488. So that is the pair of it. All right. And then there is a bank loan. I repeat one more time, this is bank loan. When loan happen, is a liability. So liability, we have to move to the credit side, okay? All right, so that is the thing. Right, now, in my previous slide, I mentioned that for closing of inventory, we no need to put in trial balance. We only put the beginning, the opening in the trial balance. So this is not right, okay? The closing shouldn't be in the trial balance. So we will move it out. Oops. Just wait a second. We will move this out. So we just move this out and then we delete this. And you can see here that now these two figures is balanced. Then this is correct. Then you will ask, then how about the inventory? How do I record it? So what will happen is when you ask someone, which is the bookkeeper, to prepare this trial balance, what you need to do is putting this, the additional information in the bottom of the trial balance. You can say that additional information, inventory at 31st of December is valued as 9,855. So this is how we correct the wrong trial balance. And now this is the end of this trial balance. All correct, is balanced, that is perfect. All right, that's all for this video. Thank you very much for watching it. Shall there be any questions, please put into the comment, and I see you in the next video.